Okay, guys, now this is a live trading account that I'm using, so I've got to fully concentrate here. So basically what we've got here is this is what they charge me, to take this trade, 18 pounds, and some other platform probably won't charge this much, for such a small volume. Okay. But anyway, I see Tyson, this is the blue line is above the zero. The Trix 55 is above zero. The QQE velocity is above zero. These are just momentum to tell us where the momentum is, right? Okay, so I said, okay, then fair enough. This is what it is. So what I'm going to do now, I need to check two more things before I jump into this trade, right? So this is what I'm going to check now. So then I go over to this thing, okay? And I'm going to go to this bit. So what was the name of that company again? That company was called Tyson. So we're going to search for Tyson. So Tyson, yeah? So Tyson. And it's a New York Stock Exchange, yeah? So then I look, okay, I see now I'm going to go to profile. When I go to profile now, I can see Tyson 43 billion, net 130,000 workers, and 2 point net income. That means after tax and so on, they have made 2 billion. So a company like this, good. Yeah. So we could look to buy. Then we're going to then go to Yahoo Finance now. Yahoo Finance. Okay. So now that we're in Yahoo Finance, we're going to put Tyson again because we just want to, because remember, even though we have the information, and remember that these things are always changing because people will then publish data. Now, if the data comes out, yeah, to Tyson, we know it's a food setup, right? So, why is it not searching? Okay, Tyson, Tyson. Oh, here it is, yeah. So look now, so we said now, profit to earning per ratio. Why are they giving us anything there? Tyson. Okay, let me try again. Tyson. 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 N. Yeah. Okay, here it is. Yeah. So we want the profit to earning ratio above zero. We want the earning per share above zero. We want it to be billion. We want the average trading volume. Now, this is saying Tyson estimated year could be 83.50. That's a potential where it could be, yeah? So you could be saying, well, 77 point this is only, 77. So from $77 to $83 is not a huge jump. Yeah. So we could basically okay. So so that's something that we could look at. But because the potential, say this was say 65 and this was 83, then I probably would jump on it. But also if you look as well, that's where it's at. Okay, because we said if it pulls back there, then we're looking to get in. Okay. So it's a potential, but let's say we're gonna buy this one. Now we've got 10 minutes left. But let's show you how I'm gonna try and set up now to do a buy, yeah? Now this account is only 1,500, yeah? 1,539 pounds, okay? This account started with 1,005. There just some profit there. So what I'm looking to do now, I'm looking to see how much risk I'm going to take because remember, potentially this is what I'm doing here. I'm looking to risk, say 20 pounds, right? I'm looking to say risk 20 pounds to make something twice that. So I'm going to put my stop loss using this or below the candle. Okay, so let's make it a little bit bigger now. Okay, so this is the average, yeah, which is 144 pips here. That's the average movement. Okay, so what I'm going to do now, I'm also going to look at the chart as well, and I'm going to go and find this out. Now, Tyson is somewhere down here. So Tyson, there's Tyson. You're going to right-click on the chart, right-click on into the market watch on Tyson, and then you're going to go to specification. Now, within specification, it's going to tell you, right, what is the minimum volume. So the minimum volume this could be is 0.8. That's the minimum volume. So I know that when I go to this section here, the minimum I can get is 0.8, right? That's the minimum volume. Now, what I'm going to do now, I'm just going to go below it where it is at the moment, where I'm planning to put my stop loss. Okay. So this is where I'm planning to, so I'm going to put my stop loss and it's can you see there that it's now saying to me 144 pips, so which is £8. So that's where it would be. So £8 is what I'm risking there. Okay, so I'm risking £8. But then say I want to see, you know, I'm gonna go to the brown line, you know, this brown looking line here. So I'm gonna see now. So I'm risking £8 because that's where I'm gonna put my stop loss to make a profit of. Let me move this out the way. I'm looking to make a profit of. Yeah, I'll make a profit because that's where the potential is. It's up to the point where it touches its straight line. So I'm risking £8 to make a profit of £24. Now, remember, you know, it's a small size account. So we've got to basically, we can't really, you know, now. So that's what we've got to do there. Yeah. So I'm going to be looking to take this trade anyway. Okay. I'm risking £8 to make 20 to make 22 pounds. So that's at least I'm risking 1 to make 2 times 2. Okay, so let's have a look now. So guys, I'm going to go straight into the market. Now you're going to see how much they're going to charge me for this trade. So I've placed a buy. You've seen I put the buy there now. Yeah. So what I'm going to do now, this is a live trading account. We're going to pull it down to the low of the candle. So which is there. So there we go. I'm risking £9 there. And I'm going to put my profit target. And my profit target, I'm moving it up to there. Yeah, which is there. That's where I'm putting it because you know where it is before, the market is likely to go there. If it comes down, then I'm losing this amount. You understand? So this is what we do. We scout the market. We're looking for trades. Okay. So we remember you already have your setup, all your charts set up already. Okay. And actually, in fact, what it would be good is if we had like a green candle. So it's always good to sort of go, you know, so like we're getting all these look red candles. It's always best to do it when we get a green candle. Okay. Because that shows that there's, you know, it has changed now. Yeah. So like say we get this one, we just take the green candle, put our stop loss below there and so on. So let's see. So I'm looking through because this is the American ones, right? So I'm looking through to see. Okay. Okay. Chevron. Right. Let's see what Chevron looks like. Okay. So you see, you get it there, you get the green candle, you buy, you look for take profit up there. Okay, Disney. Let's see what Disney looks like. Okay, if we had got in from there, then would have been good in Disney at the moment. You know, ExxonMobil. And guys, remember, you don't have to only stick to the market that you've got in. You can always then go and explore because the data keeps changing. You understand? The data keeps changing, you see. So, you know, so like Goodyear now, you know, we can always look at Goodyear because we get a green candle. We could look at Goodyear, we'll go through the same process again, you know. Look at Google. Google. I saw Google all along, you know. I saw Google from there. Could have jumped into Google, but because it's so high, I was thinking, you know what, let's leave it. Oh, right. Let's Home Depot. Let's look at Home Depot then. Okay, we get a green candle there. Everything else is set up nicely. So we're gonna jump onto Home Depot, but what we're gonna do, we're gonna do our first checks, right? So Home Depot looks nice. So let's see now. We're gonna do our checks now. So Home Depot, yeah. So Home Depot and the New York Stock Exchange here, yeah. So Home Depot, it's actually 309 now. They said the potential, the 1 year target, the average is above. All of these are positive. So we're gonna go now and we're gonna look and see if they've got positive income. So Home Depot. Home Depot. Okay, here we go. Okay. Let's see what Home Depot is doing there. Yeah, 14 billion. 500. You know, a company like this is not going to go bust. The government wouldn't allow them to go bust. So then what we do now, so we find Home Depot now. We find Home Depot. Where's Home Depot? Home Depot. Home Depot. Where's Home Depot? Home Depot.
There.
Where? Up. Where down?
Just below HP.
HP. HP. Yeah. Do go up.
Can you see HP?
Yeah, that's it. Yeah. Then they go to specification, yeah. Go into specification, we see the minimum. Okay, so that's the minimum volume, which is 0.4. So we know we go to 0.4. So you type that in 0.4. That's the minimum, right? Then now we put the minimum there for now, okay? And we look to buy. So this now is just going to give us, because remember we said 481 is what we're using as our stop loss. If you look here now, that is 110. This is 693 pips, yeah? That's what we're looking at. So we're looking at roughly a 19 pounds we're looking at. Now, right, this 19 pounds that we've got here, right? I'm not sure if I want to risk the 19 pounds here because I've got a number of trades open. But of course, the potential is that we could be risking 19 pounds to make 72 pounds. Now, guys, can everybody know for me? Well, you've only got 2 minutes. If you haven't got your charts open, buy Home Depot. If you haven't got your charts open, you can buy Home Depot. But Home Depot set up really nicely. Home Depot set up really nicely, guys. But I'm not going to buy this one. I could buy it on my other client's account. Right. Where's let's see, where did she put her login? Where did I put her login details again? I've only got 2 minutes left. 2 minutes. Right. Deborah?
Yeah.
Can you just send me a message so your message come on top with your login details?
Don't think I can do it that fast.
Oh, we got 3 minutes.
Okay, let's try.
Yeah. Okay. Have you got it?
I think so.
Oh, did he? Oh, you sent it via Telegram, yeah?
No. Sort it by WhatsApp.
Oh, WhatsApp. Okay, brilliant. Oh, I don't see it at all, and it doesn't come through yet. Oh, it doesn't come true.
Never mind.
Okay. Oh yeah, it's finally come true. Okay, let me put it in now then. Which server was it again?
I think it was 2.
2. Okay. All right. Okay. And 2, yeah?
Mm-hmm.
Come on. Jesus, peace. Did anybody else bite? Oh, it's frozen on us now because I'm
But
trying.
it's not 2, it's 4.
Oh, it's 4. Oh.
Maybe it's 4. If it's not 2, it's 4.
Okay. Okay. Yeah, I need the server as well. Because if we don't know the server, then we won't get it in. Okay, guys. So let me just pause on that one until it's viewed. Now, what I need now, based on the fact that I've just explained to you how we go about taking the trade and the steps to follow. Okay. Any questions?
Yes.
Yeah.
I'm confused.
Which part of it you're confused about?
I'm confused about where you put the stop loss.
Mm-hmm.
I'm not sure how you're working that out. You talk about the 6M and the 81, and then you add 10, but...
Okay, so you know the 6M here?
Yeah.
That's 81. That's 81 pips, yeah?
Yeah.
Okay, and if I was to... Let me go to a demo account now because I can't... But because the market is closed now, I can't use the stock slate. I'm gonna have to use a different type of a different thing to do it. Yeah.
Okay.
So I'm gonna have to use like this thing. Okay. Teaching template. Okay. Now Associated British Food. Okay. Oh, okay, right. Now, so what I'm gonna do is let's find something. find Aussie Juppie. Okay, and then let's put this on. Right. Okay, and let's put it. This is the okay. Okay. Now let's find a different market. Let's find a different one. Let's hide all. And then let's get to, let me see. Yeah, it's too late. No one get in. Let me see this one. Okay, all right. See, we get a green candle here, yeah? Now, yeah. What is the number of pips we've got there?
49.
49 pips, yeah? Now, we know the minimum for the CAD chaff, yeah, is 0.1, right? So what we're going to do, we're going to start with a 0.1. So start with 0.01, sorry, 0.01, right?
What does that signify? What does the 0.1 signify?
It simplifies the minimum trade size that you can put. So if I go to CAD chaff, right click on CAD chaff or go to specification. And if you go down to the minimum is 0.01, the maximum volume is 50. Okay. Now the bigger this bit here, the more money you're going to have to risk, if that makes sense. So what I'm going to do now is this. If I have, 0.01, which is, this is where, and look now, look, can you see 59 pips? So this, you're gonna, with this one here, just like take off.
Where are you seeing 59 pips now? You're looking on the left-hand side in the white writing, because I can't see it because it's so tiny.
Yeah, and even if you make, can you see that now? Can you see that? Can you see like £2, can you see £2.92?
Not really. It's only because you're saying it. It's so tiny. I can't see it.
No, let me close this.
Oh, £2.91 it was.
Yeah. So can you see that now? Can you see the three? Can you see the £39?
It's on the left. It says buy limit.
Yeah, buy limit 0.01, £39. Can you see that?
It must be my eyes then, because I can just see some blurs, but I can't really read it.
Yeah, it is very tiny.
I mean, my eyes aren't that great. It's.
Have you got? So do you wear glasses?
I've got my glasses on.
It's not
no, if you've got your glasses on, you probably will see clearer.
It's still very tiny, though.
It isn't. It's tiny.
No, let me tell you. Look, let me turn my video. You'll see how far. I'm sitting way back.
Well, you must have good eye.
No. Yeah. I've got 18 to 18 vision.
Wow.
It's not 20/20 at the moment because of all of the screen time I'm spending. But can you see that? Can you see? All right, look now and tell me. Can you see 32.5? 32 pounds.
I can see a 3.2.
Yeah,
I couldn't really see what it's saying, to be honest. But
yeah. Can you see? Can you? All right, let me put on the week. Look, okay. Can you see now? Can you see that there? Can you see like? I'm trying to get out of the way of that thing. Can you see it now?
Not really. It's really tiny. Am I the only person that can hardly see this? Or...
No, it's tiny.
It's gonna small. It doesn't matter which device you're on. It's gonna be small.
Yeah, I got my face right up to the screen. That's why I can see it.
Right. Well, my face.
No, you're not the only person. I'm not seeing it either.
I cannot see.
Yeah, I can see it, but my face is right up on the screen. If I put on my video, you'll see my whole face in the screen. Believe.
Okay, zoom into if you adjust it to 150%, you'll be able to zoom in and just move the screen. You can see it then very clearly.
Okay.
But you can see it from a distance, but to see it clearly, 150%.
So can you?
Just at the top.
Yeah, I see it's on 56, right?
Yeah. So at the moment it's on what do you see in terms of pounds? How much?
That's 60.
60 pounds, yeah?
Yeah, 60.
Yeah. Okay, what do you see now?
20
minus 28.
Yeah, minus 28.45, yeah? What do you see now?
Minus 18
pounds and 8 pence, yeah?
Yeah.
Now you see to the right of that now we've got what we call pips.
Oh,
okay?
Yes.
Okay, so we've got 2,223. But because if you look over here though, you see these pips, it's telling us it's 49 there, yeah? So what we need to do now, if you see basically that this is 49 pips, yeah? That's what we're saying. That's what the average movements, okay? So then we're saying that, you know, we're going to look, this is like, we've got to take off one of the digits for this one. So it's going to be 343 pips, which is worth 25 pounds, 95 pence. Yeah. So what we're going to do now, so let's go back to the process now. We'll start. Now, we're going to put, this is on the daily. Remember, we only trade off the daily, right? I realize that if I, let me move, where's that line? Okay, so here we go. So remember what we do a little test run of it to make sure that we get it right, okay? So what we'll do here, we put buy below, yeah? And then we're gonna move our stop loss to the number of pips. Now remember that's 49 pips, yeah? So 49 pips plus 10 give me what?
59.
59 pips. So we're gonna go down till we get to 59 pips. So there's 59. Okay, let me make it a bit small because I'm not seeing it because these candles in the way. Okay. So if we move this now, can you see that this now is 94 pips? Let's go. Can you see now the bottom of this candle here? That's 42 pips. Yeah. We're looking for 59 pips. So 59 pips. 59 pips there. I'm risking what? How much money? I can't even see that money. It's saying, all right, it's if we go to this brown line here, it's saying that we're gonna risk £6 something. Okay. So we're gonna risk £6 something. That's what we're risking on this trade. All right. Now what I'm gonna do now, I'm gonna risk this one on the live account. Yeah. Let me set up a it's only because I'm trading your account, I can basically trade for.
Yeah.
So you can either log into your account from here by going to file and then log in, or you could log in by going down to the right hand side here. Let me just move this up. Move it to where you see this number, where you see a number there. Just click on that, left click on it, then click on login, and then we can type in the numbers, okay? So it was 800, yeah. 851. So I just need to find the correct server now. So just log into yours now for me, Deborah, and then
yeah,
tell me.
I'm doing that.
Yeah?
Yeah.
Okay. So if we don't have the correct server, guys, you'll be okay. Okay, we'll have to do it again. Okay, let me just cancel this one, yeah? So this is how you would close a trade if you want to close it. Yeah? Yeah. So what I'm going to do now, guys, I'm going to place a trade again, okay? So what we do, we take the minimum, okay? And I would like you to use the minimum trades, all right? Minimum, and how we find that, right, for the person who was late just coming in. So what we did was, say, for example, this is CatChaf. We go there, right click. Yeah, so first you go to, let's get rid of this first. So this is the chart we look. We go to view, market watch, we go to CatChaf, right click on it, go to specification, go scroll down specification. It's going to tell us the minimum trade volume, which is 0.01. We're always going to be using the minimum until you get enough experience. When we say minimum, that's the volume there. That's the minimum volume. Okay. Now what we're going to do now, we get a green candle there. Say at the end of the day, we'll look, say we'll buy into this trade now. If we want now to basically put our stop loss, because remember, we already see that the brown line above and the brown line below is going to give us 2 to 1. If it's not, if this line and that line is like this between them, no, we already check out and we look, we say, okay, that's going to be our target there, right? Okay, you know, I've got to show, let me just show again. I need to show you something. Remember, I said to you that what we do, we'll put a like a fake buy. So we'll right click and we put a buy there, right? So put a fake buy just to see. This is like a little fake buy, right? So put this there. It's not bought yet. This is what we call a buy limit, but we're not using buy limit where we're buying into the market, right? So we put that there. Okay, so that's 78 pip. That is the 59 pip, yeah? That's the 59 pip there. And that's risking £5-6, yeah? The target is above there, 10. So risking £6 to make £10, okay? All right, so that's what we're doing. So once we see that, yeah, it's reasonable. it's 2-1. Yeah, 2-1 there. All right. So we come off it now. We basically say, yeah, that's reasonable. That's fair. We would like this one. Then we're going to bend basically. Then we go on to the relevant platform now to go and look up those stocks. Yeah. So what we do now, we click on buy. So we basically click on this. We click buy. All we've got to do now is to pull this down. So that's our 59 pip there. Yeah, because remember we said that number M, that way, so the M is 49 plus 10. So that give me 59 pip there. So I'm risking roughly £5 there. And I'm going to move it up there to the top there where the horizontal line touching the brown line. Okay.
Can I ask a question here?
Yeah.
Because I can't see these figures. But am I right in thinking where that green ball is, that's the bottom? So in order to get the stop loss, saying that from the base of that, add the 49 plus 10, 59, in order to give you your
stop loss.
Yeah, and that's it basically, isn't it?
Yeah, that's it.
Okay, fine, thank you.
Yeah, and then so from where you enter there to there is going to give you 59. Yeah. So now that you've done this, now say for example now we are in this trade, right? But then we end up here now, where now we see the market didn't come and hit our stop loss, right? Didn't hit our stop loss. So what we're now looking to do now is to move it now. Now remember this market is closed, right? So I got in from there, okay? So what I'm looking now to do is this. I need to now move this from there to there. So that now is my basically I would move it to break even and I would leave it. Yeah, that's what I would do. But remember this market is closed now, so we can't really do anything. And remember that the US market closed at 9 p.m. and the European market closes at 4:30 p.m. UK time. Yeah.
Can I ask a question?
Yeah.
You did a fake buy. How do you do fake buys?
No. Just right click. But I can't do it on that one because that market is closed. You can only do it when the market is open. So right click.
How do you do that? I've never.
So right click and then go buy limit.
That's a fake buy.
Yeah, well, yeah, no, it's not a fake buy, you know. If the market comes down there, you'll be triggered into the trade. But what I'm saying is we're not buying there. That's just to help us with our measurements.
Oh, okay.
Yeah, so that's all it is, to help us with our measurements. Let's see if I can find anything else that is set up, right? Let's see, because I'm gonna jump into this one after. Okay, so the next one we've got now is this. If I go to view, and then I'm gonna look at let me see. I'm just trying to find some markets, and then what we're gonna do, it's gonna be more likely I'm just answering questions, okay? So guys, if you basically, right, so I've clicked on here the majors, right? Okay, so the major there. And then show. Okay, so now what I've got now is, you see, you would have had all of your things set up, right? So when you come home now, you're basically just doing this and just searching for opportunities. That's all you're doing. Okay, so like here's one here, but look at this spread. The spread here is 27 pips. So yeah, so it's gonna cost you a lot to get into this one. So the spread is very high. Now, that's the reason why I say you do the fake buy first, like, you know, so you can see what it's like. And also don't put any real trades on your account until every time, like today, you know, it charges me. They charge me. I put a buy on Baidu today, right? And it charges me £137 to get into the trade. And the reason why is because I was trying to do it quickly because it was my dinner time at work and I wanted to put the trade on because I saw it from yesterday. But then my demo account is not on my laptop. So I couldn't put it on the demo first, because if I'd put it on the demo first, what would have happened? I would have seen it charge me 137 and then I wouldn't have taken the trade, because I don't want to be, that's 137 pounds come out of my account to pay to get into the trade. So try and put it, huh?
Have you lost that then? Do you
No,
not get it back?
no. The only way I would lose it is if the trade is a loss.
Okay.
So what it does, right? All right, let me do it with this one. So let's look now. So we're gonna buy this one, yeah, to show you something here. Okay, so we're gonna use say 0.1, yeah. So let's use 0.1 so you can see the significance of it. Okay. Now, so 0.1 there, and then what we're gonna do, we're gonna look to buy, right? So if we then go to and what we want to see what's happening down there, and this is the New Zealand Singapore dollar. So I'm gonna put a buy. The spread is 27, yeah. So let me show you now. Look at can you see how much it charges me there? Can you see that figure?
Where is it? Is it 14?
Yeah, 14 pounds 81. That's what it charges me to get into that trade. Now, if it goes up though, if it goes up to there, then of course I'm going to get my money. But let me show you what it's in effect. This is what has happened. It has basically, right, I get triggered up there because there's a spread between where the sell is and where the buy is. I want to buy, but because there's a huge gap of 27 pips, yeah, then I get charged the spread. That's how the company makes their money. The only way I'm going to profit, however, is if this thing then goes up and go back to this point. So once it gets to this point, then I'm back to break even. But I've got to wait until it moves up 27 pips before I start making any profit. So like a stock, if this was a stock like this, you wouldn't really want to get involved in. Yeah?
Mm-hmm.
Okay, let's show you now. So let's go and so I'm just going to see if I can find anything that's set up like this. Okay. Catch up. Okay, so remember we trade from the daily, yeah? Okay. Okay. Choppy. Your cat. Eurochav. Okay, so Eurochav, right? We've seen Eurochav here, and we see we see the spread. Now, by the way, the spread here is going to be two pips. So I would go on to, it's 20 points, but it's 2, because if we divide it by 2, yeah. Because I look, if you see, I do this now at 0.1, yeah. Okay, so for every movement, so let's see how much it's going to charge me now. You see, it charges me for Euro Swiss franc. It charges me £1.50. Now, let me show you something here now. If I was to move my stop loss here of 41 pips, so there's my 41 pips there. So that's 20, 30, 40, and then my 50 pips is there, yeah? My 50 pips. So this is actually 69. So that's 69 pounds, yeah? Okay, and then my target here is there. A target which is up to where the brown bit is. So you're looking at 100. So you're looking at a 2-to-1 risk reward. Okay, so that's as simple. But remember now, let's look at the fake buy now. Let's look at the fake buy now. Okay, so we see something here. We'll get our green. This one was blue and it's above there, right? But what we want to make sure is that this is above and that is above, and we'll get the blue there. Okay, or if you don't want to wait for the blue, you get the green dot, you take the trade. But look, so what we do, right click, and we go to buy, right? So what we do, we look there, we find the 40. Let me just I'm going to take off this spread for a minute. Let's take off the spread because I can't, it's in the way. So let me take off the spread indicator. Okay, so let's take off this one. Why is it didn't come off? Right, let me see, refresh. Okay, yeah. So guys, if you try and take off something and it basically didn't come off, you refresh, yeah? And then that should, so if you want to take off at any point, that's where you go there. Okay, so let's see now. So we've got this now. That's 65 pips. We need, remember, we're going to do 41, that one, we 6 months, 41 plus 10. So that's now, can you see the 47? Yeah, so that's going to be our 51 pip. So, and then what you could do, you can hover over it as well. If you hover over it, you should also be able to see, no, I think that's probably when they take the trade. So this is where we are now. So that give me my, because you need to see the money. It's the money you need to see. So that money there is £71 you're risking there 57 pounds, roughly 50 pounds there, right? So that's where the stop loss would be. Yeah. So if you're willing to take the risk from where it is now, then you place a trade. And then you look now to see where the line is. So if you move this out the way, you're going to see, you want to see, okay, this is where you're getting in. You go up now to see if it's worth it. 2 to 1. That's fine. Okay. So you say, yeah, I'm up for this one. So I now go in and I click on buy. Okay, put my stop loss down. Okay, that's my 40, that's my 50, yeah, pips there. Okay. And then that's my target there. That's my target up to the brown line there. Yeah. But also you could look at where you had the last red dot if you want to. Okay, so that's it. I'm done. Okay, let's see if we could find any other thing. Your GBP. No, that's below. So we're not, we only want to look to sell. Okay. Because if these aren't above that line, then we're only looking to sell. Now this one we could buy. Okay, let's show you this one now. Okay. So if we were going to buy this, right? Let me show you something here. Let's take off these off it and show you something here. Delete, and delete. Yeah, this is where we are. Now, if we were to take this trade, let's look at, we know the minimum is 0.01, yeah? So I'm going to put the minimum, which is 0.01. Okay, so that's the minimum. I put the minimum there. I'm looking to buy, right? So at the moment, it says 70. So that is 109 pip. We're looking from the point where it is at, okay? So that's 80 pip. That's 79, so we need 80 pip, yeah? So that's where we get the 80 pip there. That's the 80 pip, yeah? Okay, but that's 80 pip, which is gonna risk us. We're risking, that's telling me £7, yeah? From where it is now, if I was to move it up to the brown bit, that's £6 something. So that's 1 to 1. You don't really want to take a trade like this. Yeah? That's 1 to 1. So you don't want to take a trade like this. All right? Yeah? Any questions, guys? So what I'm going to do now, I'm going to stop talking now, and I need you to ask questions based on all the stuff that we've been talking about. So if we go down, everybody will have a chance to ask a question, and you've got 1 minute, yeah? And so if I go down to Nadia, if I start with you, can you ask a question based on what we've been doing today, or any question that you just stuck on anything or so on?
I just need to practice now because that's where I need to be. I've got a better understanding. I think once I start really playing around, I'll be able to see the benefit at the moment. Okay. Yeah.
Okay. Thank you.
Yep. So that's where I'm at with this.
Okay.
It was really good this evening.
Okay.
As I said, I've got my face right up to the screen, so I'm seeing everything.
Okay. Brilliant.
Yeah, so I have been focusing. Okay. So thank you.
You're really welcome. Yeah. Jean?
I ditto what Nadia said. I've got to do a lot of practicing as well. I've learned a bit more from this session than I have the previous sessions. So I've still got to go through all the lessons and get au fait with everything.
Okay.
But yeah, I'll be doing the same as Nadia, trying to catch up.
Okay, Deborah?
Well, I'll be the different one. Completely confused.
But what's your question?
My question is, you went over the stop loss, but I can't see the figure, so it's very difficult for me to.
I think when I upload it to YouTube, if you look at your laptop, you should be able to see it.
Well,
actually, let me try something and see. Let me change the background to white and then change this to black. Let me see, and then if I put this as a, can you see that?
Better.
Okay.
I can see 131. Yes.
Okay.
Yes, I can see.
Yeah, what so God said blind man can see now.
I can see.
Okay.
Yeah.
Like clearer, I have to say, than the other
Oh
background.
my God.
But the reason why I look at, because I'm looking at the chart, you know, this bright black, the white light, you know, it's too much for my eyes, so I tend to use the black background. So I'll probably change it then for the next time. Okay, right. Thank you, Deborah. Ali.
Hi guys. Yeah. Well, I've explained to Marlon already. Like I'm behind basically. I need to check a few lessons, but this was quite quite clear actually. Obviously, I don't want to repeat any questions that you probably already said, you know, already, you know.
Yeah.
But in terms of this, when you actually you cleared up what the question I was going to ask was, does it matter if we put the white one or the black one? But you
no,
it
doesn't matter. Yeah, it's just that because that's just so bright.
Yeah. As time goes on, I understand. Okay, and then the markets have you guys gone through the fact that the time differences or the markets, are we specifically just dealing with the British, UK
well, it's that's the thing that, you know, people will then be looking into which market they're going to be trading and which times they're available to trade. Because remember, if it's only recently I've started trading the American market. Because when I was head of department, I just didn't get any time whatsoever to do any of these things. And actually, no, sorry. Recently, I've started trading the British market, because throughout the daytime, I can be calling at any point. So the only one I was able to trade was the American market, because that one is in the evening and I can come home and see the trade. Whereas, because I can, so I'll finish working at 4. I've got meetings till 5. So then I used to come home like, 6, and then that's the time when I can do stuff. But prior to that, it was really, really difficult. So British, and however, the British stocks though, they move a bit slower and they make profit on them a bit slower. Most of the money I've made is from really the American market, and probably because it's the time as well. Because by the time I finish work, and sometimes I do after school classes, so then I can't do anything on the British side, because I want to go in like at the end so I can put the trades and so on. Yeah.
Right.
Yep. Okay then, brilliant. Thank you for that, Ali. Right. Let's see. Lydia. Any questions?
No, I don't have any questions.
Okay, brilliant. And Mark, any question?
Yeah.
Yeah. Hello, Mark. You're not sleeping. Are you sleeping on me?
Where you get that from, Marlon?
No, I'm not getting from nobody.
We've been talking to Marlon.
No, I get from nobody. No, just a check. I'm in the ear like you're asleep or something. I wonder.
No, all right. No. To be honest with you, I've been lost probably since last week. But I know where I'm lost.
Okay.
Now, I don't know exactly how to buy, how to sell. I don't understand. I know what you mean when you say you set a buy limit and a set limit.
No, don't worry about the buy limit. We're just going to buy into the market.
We're just going to buy into the market.
Yeah, we're just going to buy. But what we do, we need to measure it first.
Yeah.
So when I say, for example, because we've got to measure, say I said I was going to buy this one, but I am going to put my stop loss. This is where I'm going to put my, let me show you. Okay. No, let's make it a bit bigger now. This is where I'm putting my stop loss. Okay. So I know I'm looking at 60, 70 pips there. Yeah.
Why is it that when you look at
No, because why? Because on average, this thing moves 60. So if it moves up, if it moves 70. So if it moves 70 and come and stop me out, that means the market start going in the opposite direction. Of course, we can always get back in. But at that particular point, we've got to give ourselves to say, look, this thing on average, it's moved 70 pips. Over a 6-month period, it has been moving. The average daily range is 70 pips. So we're saying, look, you know what? We're getting there. We put our stop loss below. You understand? So that's what, and we put it 10 and an extra 10 onto this. Yeah. And we're good to go. So,
can I just ask?
Yeah.
This data that we're looking at, right? These trends, these are past.
Yeah,
right?
these are past, yeah.
Past. Now, when you say you're going to buy, you're saying what? It's based on this past trend, right?
No. We're talking about what's happening now because we're saying that this is a green line.
Yeah.
So if you go back to this, let's put this back on now. So we look, this is blue and above 0.
Yeah.
Yeah. Okay. This is above 0. This is blue and above 0. We get the green dot. Yeah. Then we look to buy. Okay.
It says 25th of March.
Yeah, but remember, we haven't got a green dot there. But I can only show where the green dot, we get a green dot, they will buy.
Yeah.
You understand? So if it was say, for example, now, right, we had a green dot there, then we would buy just like what we did previously.
Yeah.
So weren't you seeing what I was doing before? Because I did explain it.
When you say before, you mean today?
Yeah, no, today I'm talking. Yeah. So basically, we then say let me just go back to a blank chart there. Because sometimes you have to go to the blank chart so you can see it a bit clearer, right? So if we go to the blank chart there, right? And I put buy there, right? Remember we said this, don't worry about this, but this is just to help you to work out. Yeah. So if this is where we said we're putting it and it's 70 pips, yeah. So 80 pips, that's where. So we're risking. Can you see that? Let me change it back to white now. Okay, now can you see here now where I'm actually risking? Yeah, at the bottom there, it's having the 9, it's what, how many pips you said? It was 80 pips, yeah. So I'm risking 80 pips there, right? Okay. I'm risking because I put it at the low of the candle. Okay. And then basically yeah, and then we basically do this now. And then what we do now, once we do that now, we see that. But of course, we'd have had a brown line on, and then we'll take this and move it up to a brown line. Yeah, just to see how much we're going up this way and down that way. But of course, I wouldn't have done this one because you know why you wouldn't have done this one? Let me just show you now why I wouldn't have done this one. Because the risk reward is very low. We're not going to make much money. So let me make this a bit smaller. Okay, so if I then just change the background on here. Okay, so remember we said we're looking up to the brown from where it is, yeah? So if we were to pull this down a bit, you're gonna see now, look, we're putting our wrist at there, but look, if we move it up to the brown, right? That's like 5, yeah, 6 pounds, yeah? 6 pounds, and we're risking like, 6 pounds. So basically, right, it's not gonna give us much. You understand? Yep. So it's pointless. So then we'll just take this off and forget this. And just click delete and it's gone. Yeah, that's what we'll do. All right. No, yes, thank you, Mark. Let's see. Right. Let me see now who I haven't asked yet. Yes, Leonie. Leonie. Leonie.
Sorry, I had my mute on.
Okay.
So basically, Manu, sorry, I missed the beginning of the lesson. You're trading in between the 2 brown lines.
Yeah.
Right. Yeah. I'm understanding a little bit more because you've explained the ADR. What's that about? And
it's the average daily range.
Daily range, yeah.
But the range there is the we use the 6 months. Of course, we could use the yearly, but I said to you, just add 10 to it.
Yeah. Okay. All right. So it's a matter of just finding our markets and then trading.
And then what you do in the evenings when you come home, this is what you do. You go to your profile and say, this is my Swedish stocks, yeah? So I go to my Swedish stocks now to find out if there's any opportunities, right? So I go that one. Okay, well, I'm not sure why these are. Okay. So this one would have been, a good one when I saw that there. AstraZeneca. Oh my God, no matter how they set the ban AstraZeneca and it's still going up. And I got, look, AstraZeneca is still going up. They banned them from one of the, I think it's Sweden who banned them. Okay, but they're still going up. Ericsson. Okay. So look at Ericsson now, right? There's an potential opportunity for Ericsson. Just because they start going down, almost if we could get like a blue and pointing back up, that would give us a better chance. Yeah. But then of course you remember that, you know, even though you've got Ericsson there, right? And you see this, it's above, that's above. The most important bit, you know, because we're looking at the fundamentals of the company. And you know, if the fundamental is not good, if the fundamental is not good, then we're not interested. ERIC. Yes.
So basically building up our list, we need to go back to the fundamentals and build up our list. So
No. I'm saying it's always changing. So this is Ericsson. Is that 109? Yeah, that's 109. So that's Ericsson. So you see when we go to this one and we check, because we see, oh my word, they've made 18 billion. Ericsson had relatively flat revenue, though the company grew net income 688%. A reduction in the cost of goods sold, a percentage sale was component. We're also looking at it provides infrastructure, software to telecom. Okay, everything is up over 100,000 employees. Yeah, you know.
So Marlon, are you checking the fundamentals every time you do a trade?
Yeah, you check.
How often do you do the fundamentals?
No. Remember, you know, I've already got them here. But of course, things could change because look, remember this year will give us the up to date. You understand? Even though, you know, it's not we can't go in because remember, if you don't find this link that I've got, then you would have to pay for this.
Yeah, we've got the link. We've done that. But I'm saying,
but I always check the fundamental.
Once we've done our list, how often are we then going back in?
Just to confirm, unless you go to this, and we look for Ericsson, and then you look. So Ericsson, this is, if you don't want to be able to go back, you can go into this one and look. So we go Ericsson there, Now, if you look now, is that Eric? No, because remember there are different companies all over the world, Ericsson. Was that one Stuttgart? Yeah, that one, So this is Stockholm, So basically, can you see now? Their next trading update, earning date is not there. You understand? Because we don't know when their next trading date is going to be. We could always go onto the website and we can find what their trading update is going to be. But this is what we also need to do. We need to look to see if they've got an earning date coming up. Because if they've got an earning date within the next 2 weeks, they don't really want to trade them. But they're gonna give a dividend in 30th of September. So if you're in a sell trade on this, you'll have to pay the company. But if you're in a buy trade, you make profit. Also here, the 1 year target estimate is 81.10. This is already exceeded 81.10. So of course it might go up even further, but the fact that we said we want this to at least have some potential to go even further. You understand? So we look at the 1 year target.
Right.
So remember,
you know those trades that you've given us? You've given us some trades. Did you come back to this and check all this before you gave it to us?
Yeah, I've got to do it. Because if I don't,
every time you do a trade, you come back to the fundamentals.
Yeah. Especially the fact that I am giving it to you, and you basically are I was going to let me show you a trade that I was going to give you. I was going to give you AT&T, but let me tell you, AT&T. Yeah, I was going to give you AT&T, but then when I look at the fundamental, AT&T was negative, and remember we said it has to be positive. You understand? So that's the reason why I didn't give you AT&T.
Right. Okay.
You understand? The potential there. So even though AT&T, let's show you AT&T. AT&T had a setup. Let's see, AT&T. Let me see. Let me find AT&T and show you something. So AT&T had a setup, and I saw it, and I was like, I can't send that one to you because it's not a part of the trading strategy, right? Okay, that's Sweden. Let's go back to America. Okay. All right. So AT&T. No, remember AT&T was a part of my thing. AT&T was a part of my my list. There it is. AT&T was a part of my list. There it is.
Okay. So you saw a setup, and then
I saw the setup on AT&T. So now I saw the setup on AT&T. Now, all right, that's it. I saw my green there, right? So I said, okay, this is above, that's above. blue line striking up, I get a green. This is like a supply. Yeah, it's also just on the point of this line. Of course, I would have preferred for it to be above. Okay, so now I then go on to here now and I find AT&T, just to confirm this setup. So look, AT&T has got a negative earning per share, and the profit to earning ratio is not even there. Look, the 1 year target is like 30.59. So okay, right. Let's dig deeper into AT&T now, and see what's their net income like. Are they making any profit? Or are they losing? Okay, so AT. It's AT&T. Okay, let me see what they call it here. They call it T. They call it T, but let me see. Okay, so AT&T, New York Stock Exchange. Okay, and then we go to we'll go to profile. Yeah. Look at that. AT&T, the net income is 2 billion, but remember they've got 230,000 employees. Now even if you love AT&T, right, the revenue fell by 5%. In addition, the company has been unable to reduce the cost of goods sold, selling, general administrative expenses, and so on, right? Now you see that and you're like, of course, yeah, it's Corona and blah blah blah, but the fact that this is negative, you're gonna have to just take it off for a bit. You understand? Because if we had seen this, no, look at this now. What if we had bought AT&T? Look at what AT&T went up, and look at collapse. It just dropped. It gap. This is what you see. It just drop. Yeah. So I probably wouldn't give you that trade as a trade, because once I see this, then that's it. It's over. The relationship between me and AT&T is finished for the time being.
Right.
I'll put it on hold until they start coming back to profitability.
Right.
But remember, they're 4 quarters in a year, right? So at quarter, so they might be negative now, but in 3 months' time, things work out. They probably get a new general manager who is far better, more sophisticated, more intelligent in terms of the way he goes about business. So then they spin that around quickly, and they're up 4 or 5 billion, and AT&T shares just rocket up.
Right.
Yeah.
Okay.
Okay. Sashay?
Yes.
Any questions?
No questions.
Okay, thank you. Mel?
No question.
Okay, all right, then I think I've done everybody 1, 2, 3. 9. Okay. 9. I've done 9, 10. So one more person. Who have I missed?
I think it's me.
Oh, yes, because the name is not showing on this. Yeah, Nadine?
I don't know why is my name not showing though. Oh, it's there.
Yeah.
No question really. It's just that I really need to get some time in to do some practice.
No,
I'm
but
basically out of practice. I guess when I start practicing, and if I'm not sure of something, that when I'd really have some questions.
okay, but what you got to do though, you got to press the button. You remember, so did you take the trades I gave out last week?
No, I didn't. I wasn't in last either.
Yeah, but
I watched a recording, but over the weekend.
But you've got to take the trades. You've got to take them. If you're not, because that's what you just need to start pressing that button. Just press the button. Look, it's as simple as, look, let me show you something here. Right, let me see. Bam, 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 bam. Right, let's see. All right, let's look at this one. Right, make sure you check, guys, because you're gonna have your demo and your what's the name live on the same. Look, there it is there. Right, then I'm going to do the minimum 0.01 for this one, yeah? And then look, that's all you do. Buy. And then you basically do this. Okay? Pull down between the low of the candle, yeah? And my target is up to the top there. That's it. You're done. That's all you're doing. So you just need to do some of these. You get up every day and you just do this. And you look and you just basically go through and look and see if you can see any trades on. You see, look, this one here, this is Amazon, right? I got the green dot on Amazon, bought, put my stop loss there. what I should have done now is this: move this now up to break even. So therefore, you know, I know I've secured some of the profit. Simple, guys. Yeah. See, I got this from there. That was above. That was above. I buy Amazon. I got the green. I just buy it. And I can see here that every time, and remember I taught you as well, supply and demand zone. You can see every time it comes there, it goes back up, comes there, goes back up, comes there, goes back up, comes there, goes back up. That's what Amazon has been doing. It's in a range. So why I taught you those bits, even though it's, you know, we're not really using that strategy, I needed you to have an idea of what we call supply and demand zones. Okay. So guys, thank you very much for your
Marlon, before you go, did you send a link in last week's lesson? Did you send a link for the Financial Times?
No. These were sent from a long time ago, but I can drop it. I'm going to drop it in the chat again for you, okay?
Okay.
Marlon, not in the chat, in the Telegram, please.
You want to do it in the Telegram? Okay, let me put it in the
And
Telegram.
also Marlon, the link for the lesson 8 has broken. I couldn't get into it. I've tried it a couple of times.
Okay. I'm not sure. Okay.
And one more from me, Marlon.
Yeah.
I noticed on the charts you had exposure. How did you get that on the chart?
Well, we're gonna talk about exposure after. So let's start placing some trades first, and then we will talk about exposure after.
Okay.
Are you gonna put the link in the chat?
No, the link's already in the chat. I've put it in the chat already. Yeah, it's all done.
I haven't seen it.
Yeah, probably internet slow. Okay. Yeah. So you could also use TradingView as well. So TradingView, and this is a really good one as well. That basically gives you the overall, it's the stock screener in TradingView, which gives you basically which is what everybody should have used already. Okay. And of course, we're just using the free ones, because a lot of these companies, you go and you pay big money and they get you to sign up to these things. So you pay in the leg when you're not even earning money yet. Okay, so we use the free ones and we just put the relevant stuff in. And then once we've got that now, we can even see where buy and sell, and then you can go back in, because look, it's saying Google buy. Yeah, Google buy, you understand? And so on Tesla, it's saying no, Tesla buy. You understand? So you can always go back now and see if it ties in with our strategy. Okay. So, right. So you can use that one as well. So let me drop this into the chat as well. So I put this into the chat.
Telegram.
Yeah. No, it's in the, no, sorry. It's in the Telegram, I put it in the Telegram. Yeah, it's in the Telegram. It's all there. Okay, guys, thank you very much for your time. Really appreciated. Please take trades and take a photo and stick it in the Telegram chat. Okay. God bless. Peace out. Happy trading.
Thank you.